Hi guys, this is Mark with my analysis for the week commencing the 27th of August. I am back from my jollies, my holiday in the UK. Rained a bit. It was a lot cooler than here in Portugal, so for the minute that wasn't such a bad thing. Now, on Friday, as you know, I never trade Fridays, and I always tell you do not trade around big news events. And the big event towards the end of last week was the Jackson Hole speech, and we spoke about that in blog posts while I was away. And this is what went on. So it shot up 40 odd pips, did the euro against the dollar, so bad for the dollar, and then it went the other way, 40 odd pips, and surprise, surprise, by the end of the day it ended up roughly where it started, which is why we don't get involved with all the nonsense. Now, we had spoken about this earlier in the week. James talked about it on Monday, about the potential implications of what would happen, and I showed you this. I posted this in the forum on Friday. Good article as ever from Mark to Market, and he was explaining what may be the outcome depending on what they said. And then what did they say? Well, Powell said the same. I don't think anybody, to be honest, believes Powell anymore, but Powell came out with his usual tosh and said we are prepared to raise rates further if appropriate. He also said they intend to still aim for 2%. Now, there is talk in the US of, well, look, it's looking a bit tricky to get to 2%. Maybe we should lift it a little bit. And I will not be surprised at all if they go for 3% later in the year if they're still struggling. So that was the mixed signals as ever that Mr. Powell gave out. And during the week, there were mixed reports coming out, particularly nothing good coming out of the Eurozone at the moment. Most of the manufacturing and services now in the main Euro countries and the Eurozone are in recession. Anything below 50 is seen as recessionary, and particularly the German manufacturing down was slightly better than I expected, but 39 is terrible for the German economy, powerhouse of Europe. And then the pound, again, they were down again. Flash manufacturing, not as important as services, because the UK these days, they've sold their manufacturing industry, or it's been bought by Germans, Chinese, et al. But flash services, the UK is a service industry as much as anything these days. That has now gone below 50. So basically, mixed news for the US, negative news for the UK, negative news for the Eurozone. And then again, with the US, you've got unemployment claims slightly better than expected, but then durable goods orders were down. So it's all over the place, and we're going to have a look at that in a little while. And then Friday, you've got the German IFO business climate came out as well, worse than expected, and the USD revised UOM. Now, then we had Ms. Lagarde, and as usual, she just talks nonsense as far as I'm concerned. I mean, this is a classic Lagarde statement. She's pretty confident by the end of 2023, the inflation numbers will look different. I think that's a fairly sure bet there, Christine. Yep, they're definitely going to look different. Whether they'll be up or down, they're quite probably going to be different, but she's not making any claims because she's useless when it comes to predicting what's likely to happen next. And again, I don't pay much attention to her, but she stands by her June economic prediction. She also said that they are going to stick with the 2%, remain anchored at 2%. That's their target. Don't bet on it. If they start to lose it, they'll move it. As you can see, I am very cynical about all of them. It's all a rigged game. They've all got their own agendas, and you have to try to tiptoe your way through all this nonsense. Now, for the week ahead, Monday's a fairly slow day. Tuesday, you've got the new governor designate for the Australian Bank. Now, this lady was previously deputy. She may want to change course, or we don't know what she's going to say. This is a speech that she's making here at a lecture in Australia. The more important thing for Australia is CPI on Wednesday morning early. And you've also got here for the US, you've got S&P. Now, this is to do with the housing market, and it's a leading indicator of the housing industry's health. The thing about the housing market in the US, I've been reading a lot lately, there's not a right lot for sale. A lot of people in the US are fortunate to be on a 30-year locked-in low-rate mortgage, and they ain't in a rush to cash that in to then go buy a new property and have to pay 6.5% interest, which makes sense. Again, you've got consumer confidence and jolts. Eurozone, preliminary CPI, again, core price inflation. Spanish, not as important. USA, so ADP non-farm. Didn't really, years ago it was important, and then it lacked its lustre, Recently we've had some surprises, so you tiptoe around that one. And then on Thursday for the Eurozone CPI estimates, and then US. And again, we don't trade Friday, and we never, ever, ever trade non-farm employment. No Forex, please, because just as I've shown you at the beginning, it is Forex at its craziest, and therefore don't go looking for this kind of trouble, because that's what you often will find with NFP. For the week ahead, the dollar index has broken the major trend line of resistance on the weekly chart, which is significant. However, I noticed that it hasn't broken this area here, and this is an area I had for a while. So it's the spike from 2020, been major previous support and resistance. It's one of those annoying weeks. I do have some good potential setups, but there's quite a lot of them. We're going to have to wait and see what happens, because this could quite easily drop all the way back down again. Now, another thing to note while we're going through this analysis for today, I showed you a few weeks back before I went away, there was MACD divergence all over the place. And when it's on weekly charts, it's more significant than on daily. And if you're not familiar with it, price here was making new lows. And yet on the MACD trigger bar, it was making higher lows, which is a clue that price is probably going to go back up again. And it did. Doesn't work all the time. But this is why we use multiple reasons. And the same area here, the trend line, 200 EMA, 55 EMA, that was an area, if it was going to bounce anywhere, it was probably going to bounce there. And similarly then on the daily, you have this break of this trend line. It came back for the retest. If you're going to trade this, you would be interested at 103. Personally, I would leave it Monday and let's see what happens. Oil broke higher the other week. It's come back down. It's stuck at the weekly 55, leaving it alone. Then gold dropped recently. If you recall, I was saying I would buy more gold at 1900, which I have done. I also have orders in going down. I think one at 1825, one at 18, one at 1750. I am a long-term gold bore. I haven't been into gold for many years. I am this year, and I am looking to accumulate more because I do think that we're going to see gold break higher. Again, this was MACD divergence at the top, was a clue that it was likely to top out. A bigger clue was this was a triple top. So if we move higher again, it's going to need something special to push through here. And then again, if we look on the daily, it's stuck. It's stuck between the 200 and the 55 with a trend line above. I don't trade it, and I do not under any circumstances use leverage with gold. You will lose your shirt. This is silver. Now silver, I use the same technical analysis. We had a pullback into 61.8 last week. We had the trend line and we had the 200 and the 55 EMA below. And once again, I explained recently, if it dropped, I would be a buyer at 22.50. And I also had an order in at 2200 that did not fire. Now I would reassess that and I would be looking at 22.10. And again, I have orders in down here, I think somewhere around 78.6 and definitely down here around 20. Bitcoin, I will do a separate video for you on Bitcoin and we'll cover this in a live session on Tuesday. Again, look at this on the weekly. It's stuck between the 200 and the 55 EMA. But there are things going on in the background that still give me confidence that Bitcoin will go higher. But it's not to say it could not go on a big drop first. The big firms, as they come in, want to push the price down to scare the little guy out of the market to go in and buy cheap. And I think that's what's going on at the moment. Now, Ethereum, we're getting across almost on the 55-200 here. That would be a very bearish sign. Once again, I mean, if you remember last year, I was a buyer of this. I said I was buying at 1,000. And I also had an order in 850 that just missed. So that was the last time we got down into this kind of territory. At the minute, if I was nibbling at it, again, I don't trade it with leverage. I buy it and I hold. These are areas of interest, but I think at the moment, I would be inclined to leave it alone. And again, now, this is the issue with Forex. You've got the USD Swissy tried last week to break the upper trend line, and it did not. Once again, we had MACD divergence before, showing us that that was a strong clue it was probably going to pull back up again. Now the issue is going to be this. Look, it came up to the 61.8, was bouncing off this all last week and the part of the week before, so for 10 days. Friday looks as though it was going to close above. Now, woohoo, we're going along, and it didn't. It stopped and it came back in, frustratingly, right back into here. So the issue is going to be on Monday, could it go up? Could it go down? I have no idea. And therefore, if you've no idea, let it do its thing. If this clearly breaks and closes above and then pulls back, I will look to go long from Tuesday on. If it drops lower and pulls back into here, I would look to go short, because at the moment my bias is still to short. Similarly for the Euro USD, it looked as though it was going to break a trend line and a weekly 55 EMA, and it did slightly break below 10800. Again, we previously had MACD divergence clues of a drop, and here it's now frustratingly sat 78.6 fib. It touched it to the pip, fingers in the fire, and bounced off. It's also the 200 and the 55 EMA. It's flip a coin, guys, because there's no other way of knowing if this is going to go up or down. If it comes back up to here, 150 pips away at 109.40, I will watch it on a 4 hour for a potential short. If it breaks and closes below here and then pulls back into here, I would feel more confident about going short down there. Now the pound. I've been out of favour with the pound of late, but I've just come back from the UK. The UK is not in a good place. None of them are. They're all in a bad place, which is least worst. But technically 78.6, which is 124.85, so let's say 125.00, you have a weekly trend line going on. You've got the daily 200, the weekly 55, and 78.6 of the recent daily move going on. I am interested to long the British pound around 125. And just another little clue in here, we have got some MACD divergence again supporting that theory. Also pound related, the euro pound. I had an order in for this the other week. I did actually have a very small win on this whilst I was away in here and had to get out because of the news. I am going to short this again, 86.30. I'm going to split it in half at 86.30, half at 86.45, and the stop above the 86.70 area here. Multiple reasons to suspect if this thing shoots up, where's it probably going to run out of steam? Up here. Remember, all we are trading all the time is probability. Similar pattern. Remember, we just looked at euro pound. We're looking at bunches of EMAs, lower lows in a downtrend, pull back to reject, and this is the same as the euro pound. So the main area for me on this one is 82.65. AUD, once again, this is weekly. We are in a long-term downtrend. Iron ore prices have dropped, and there's a lot going on in Australia negativity wise, so I don't see this going much higher. I am looking for a pullback. Now I have two areas to watch. The first area to watch is 66.30. It's the break of that previous trend line. When it broke last time, came back and tested it and then dropped. So it's 50% fib, it's a trend line. This is not an A grade for me. And remember that Aussie news Tuesday and Wednesday. So this is an area to watch. If we had a major move up on the AUD because the new governor says something completely different, or the news on Wednesday, then I would be interested to take this, but it depends where this starts. The other area of interest is back up here. Same idea with the New Zealand dollar. New Zealand dollar, bit more interesting here at 62, and at 6200 you've got the 200 EMA, you've got the 55 EMA, 61.8 fib. That looks a solid area, and again, New Zealand dollar, an area to watch on the smaller time frames is anywhere around 60.80. Other than that, we have the dollar yen. There is a clue, dollar yen, that MACD divergence, that this is probably going to run out of steam up here. This was the previous all-time high, up around 150. It was actually 149 to 150, 151, I think, or 153. At this point, the Bank of Japan intervened. They cannot sit by and watch their currency get much weaker. And so everybody in his dog is expecting them to start to intervene again to force the Japanese, put strength into the yen, which would force this to drop. So the moral of the story, if you're long, be thinking about taking final profits anywhere in here. Don't be thinking about taking trades now, because there's a good probability it's a limited move and there's nowhere for the stop. And I say MACD divergence is a clue it could be for the drop. Now, if it drops, again, it's areas to watch is all I could suggest at the moment. Is 142 is an area to watch. A bigger area where I would be willing to place a forward order would be all the way back down at 138.50. Unlikely this week. USD CAD, I've had an order in for weeks down here, missed it. I think I caught it once in here. You have to look back through my blog. I had this order in again whilst I was away. I moved it last week, so I have an order to long at 133.75. I have the stop below the 55 EMA. Probably should move it below that trend line as well. So entry here, stop here. Again, big Canadian news this week. First profit area I would be thinking where it's probably going to react would be up here. And then Aussie yen. Aussie yen, I had an order in last week, forgot to close it at the weekend. Naughty boy, don't do this. Two options with this. One, I have the entry at 92.10, so I'm happy with that. You could split this and have one stop at 40 pips below the 55 and the 50% fib, and the other half down here below the 200, but it's pushing it. But that's a very strong area. That looks stronger to me than the dollar yen for multiple reasons. Again, don't forget about the news. Pound Aussie, same scenario again. So you've got the pound we've looked at in depth, and also the Australian dollar. Interested to long this pair. It is a wild ride, and I very rarely put forward orders in, but listen to Ashley in the forum. It's his specialities, this pair. But for me, 193.40.50 is a strong area. Multiple reasons to suspect it will bounce, probably. Pound New Zealand, not strong enough for me at the moment. Euro Aussie, interesting to long at 166. Multiple reasons, lots going on here. And I think the EURCAD was the last one. EURCAD 145, interested to long. Okay, on the live session on Tuesday, I will be going through some stocks I've been buying of late, showing you how I've been hedging my mining stocks and my gold, and also we're having a look at crypto. So, look forward to seeing you on Tuesday. Catch you later. Don't forget to like and share this video and subscribe to our channel.